And the economics of the project at an 1850 gold price are an after-tax NPV of $371 million, after-tax IRR of 58%, and a 1.6-year payback. The project produces about 122,000 ounces of gold over a 9-year mine life, with an all-in sustaining cost of just over $1,000. So very robust economics for the project.
Welcome to those tuning in to the Assay TV, where today I'm delighted to be joined once again by Luke Alexander, President, CEO and Director of Newcore Gold. Welcome.
Yeah, thanks for having me.
So as always, can we have a quick recap of Newcore?
Yeah, so Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by a very robust PEA that we put out at the end of April. We've had a nice response from the market. On the back of that PEA, we've traded about 10% of the free float of the company. The stock's up about 60%. But our view is that there's a significant fundamental re-rate that's going to continue to happen as the market prices in the value of our Enchi project into the stock.
Well, as you've just mentioned, that's why we're here today, the PEA. Can you go into some of the numbers for our viewers?
Yeah, so we outlined a very simple open pit heap leach project. We used a base case of 1850 gold, and the economics of the project at an 1850 gold price are an after-tax NPV of $371 million, after-tax IRR of 58%, and a 1.6-year payback. The project produces about 122,000 ounces of gold over a 9-year mine life, with an all-in sustaining cost of just over $1,000. So very robust economics for the project. And that's something we've been highlighting, obviously, to the market. And we've also been challenging investors and others to try to find a project that has better economics than what we've outlined within our PEA. Hopefully, we'll talk about some sensitivity to gold as well, because the leverage to the gold price that is provided through Newcore is huge as well. So needless to say, we're extremely excited, and we see a fundamental re-rate continuing to happen over the coming months.
Well, let's get into that then. You've just said the base case was 1850. As everyone knows, gold prices are doing exceptionally well. How would that affect the PEA?
Yeah, so if we look at today's gold price of, let's say, 2,350, the economics of the project are an after-tax NPV of 632 million, after-tax IRR of 92%, and just over a 1.1-year payback. So again, very robust economics. And that compares to a market cap today for Newcore of roughly $40 million US. So when you look at our market cap relative to the $632 million of after-tax NPV, we're trading at less than 0.1 times the NPV of the project. When I talk to analysts and others, their view is, projects like ours should be trading closer to 0.2 to 0.3 times the NPV of the project. So our view is that we will see a fundamental re-rating of the company as the market starts to price in just how valuable our Enchi project is, and hence the reason we're so excited by what we were able to put out a couple of weeks ago.
Excellent. And the company often talks a lot about pouring a lot of effort into de-risking. And what elements of de-risking have you included into this PEA?
So a lot of drilling has gone into the project over the last number of years. So we've moved about 47% of the ounces on our project into the indicated category. So obviously those ounces have been de-risked by further drilling and tightening up the spacing, so you can have a lot more confidence in the ounces that are going into this PEA. As well as we've done a tremendous amount of metallurgical test work on the project. We've completed over 390 tests to date. About 300 of those have been completed in the last couple of years. We've done column tests that returned about 92% on average from a leach perspective. We've then also gone and done bulk scale pilot tests on the project, which also had 92% recovery. So the metallurgy has been significantly de-risked on the project. We've completed a full environmental and social baseline study. So that's one of the key things that's required to apply for a mining lease in country. We've done geotech work on the project, hydrological work on the project, condemnation drilling. So all of those things significantly de-risk the project and, take it to well beyond what you would typically see in a PEA.
And if we look at the bigger picture, Newcore are big fans of operating in Ghana. Can you tell us some of the advantages of operating there?
Yeah, absolutely. So Ghana's a tier 1 jurisdiction to be operating in. I mean, it's Africa's largest gold producer. It's the 6th largest gold producer globally. So with that, you get a very supportive government. I mean, it's important for taxes and it's important for jobs. So we get to leverage all of that, as well as you've got 2 mining universities in country. So a very talented pool of labor to draw upon. But what we also always say is, don't listen to us. We're a single asset company, but look at what the major mining companies are doing. You've got 3 of the top 10 largest gold producers with significant operations in Ghana. You've got Newmont, who's investing another $1 billion into their Ahafo project, which sits to the north of us. That will make it the 2nd largest gold producing asset in their entire portfolio. So again, I think that speaks to what a great jurisdiction Ghana is to ultimately operate in.
Excellent. And to round things up, just for our investors, can you highlight, anything you want investors to particularly focus on? Any milestones, anything about the company?
Yeah, so I think it's important to remember that, beyond the incredible economics that we've put out within this PEA, you've also got a management team and board who are truly aligned with shareholders. We own 22% of the company. That's money that we've invested alongside shareholders over the last number of years. So we didn't give ourselves stock. We've invested into the company. So I think that's important, that there's true alignment between shareholders and the management and board. The PEA that we put out obviously outlined incredible economics, but then beyond that, we've got district scale exploration. The project, we've probably drilled on less than 10% of our overall project today. We've identified more than 25 targets across the property, and we've only drilled on 9 of them. The average vertical depth of the pits that constrains our resource today is only down to 75 meters. So there's the option to continue to expand near surface ounces, which will extend mine life well beyond what we outlined, which was 9 years within this PEA. But then the opportunity below that within the sulfides is something we're extremely excited about. If you look at a number of the 5 million ounce plus deposits that sit along the Sefwi-Bibiani belt from us, where a number of those really grew in size and increased in grade is as you started to find the high grade feeder zones within those projects. And that's something that we've started to drill on our project as well. So, aligned management team, fundamentally underpinned by extremely robust economics with district scale exploration that's layered on top of all of that. So those would be a few of the key things that we would highlight.
Well, Newcore certainly sounds in a strong position for 2024, and we thank you for spending some time with us today.
Yeah, thank you, Katie.